What up, what up, what up? It's your boy, the Options Boss, sliding up on y'all. I hope all is good. I hope you guys enjoying your Saturday. And I hope you guys are making sure you're going to get some studying in this weekend, whether that's today or today and tomorrow for the committed ones. So that way we can be ready for Monday and what the week ahead is going to bring, and we can be prepared. Now, with that being said, guys, I'm going to catch you up on how we finished our week in the options trading group. I did let you guys know that the last video I made, we were red that Wednesday, I believe. And I'm going to let you know if we finished the week that way or if we were able to reverse course. Also, I'm going to talk to you guys about something that's really good to know in trading options, and that is called averaging down. If you guys are not familiar with the term of averaging down, you definitely want to watch this video to learn when to average down, when not to average down, and why you average down. But with that being said, veterans of the channel, do me a favor, like the video, drop a comment. Every time you do, your support helps this channel grow, and for that I appreciate you guys so much. The YouTube algorithm and me, we thank you. Newbies to the channel, if you're interested in learning about trading options, if you're interested in making money in this stock market, I'm your guy. I'm the Options Boss. I'm the one that's going to get you on the right track. You definitely want to go down below, right down there, subscribe to the channel, click the notification bell as well, and that way when I drop these Get Money Jewels, you'll get them first things first, right off the bat, so you can put these game plans and strategies into play the very next day in the market. Now, with that being said, guys, like I said, options group chat. Last video I made, I think it might have been Wednesday, and I told you guys we were getting beat up on a little bit, which was the first time in a few weeks that we were red in the group chat. And I told you guys we were getting beat up on, and I told you guys I was looking to come back. And we finished Wednesday strong. We had a really nice Thursday, and then we had a great bang on Friday. And I'm going to tell you why we had that bang on Friday. And we were able to finish this week red. So I came up with a spreadsheet, or should I say one of the members of my group chat graciously helped me out with the spreadsheet. I'm very appreciative to her for it. Shout out to her if she's watching the video. I'm sure she is. But with that being the case, came up with the spreadsheet 3 weeks ago. So since we came up with the spreadsheet, week one, the trades that we have suggested in my options group chat, and it is a paid group chat for members. I asked for $55 for the first month of the group chat. I asked for $105 every month after that. If you like the chat, you're making money, you're learning, and you want to stay, which is definitely the goal. But that first week, we made about $900 and something. I forget the exact number. I am winging it here. No script, no cheat sheet, nothing like that. So, you know, we made about $900 and some change that first week. And I was very happy for that. It was the first time in my trading career that I've actually tracked my trades. So I was happy for that. I was happy to see, you know, on paper what it looks like. I know what it looks like in my bank account. I know what it looks like in my portfolio. And I'm happy what it looks like in my bank account and my portfolio. But it was nice to see it on paper as well, where I can, you know, show it to somebody if need be and say, hey, this is what, you know, what we did this week, for better or for worse. So that's what we did the first week of the spreadsheet. The second week of the spreadsheet, we came back and we doubled that. We made $1,800 in week two of the spreadsheet. I was super duper happy about that and looking to keep it going. And that was this past week, which we just finished, which there was a point where we might have been down about $1,000. And, you know, options is a volatile game. So just like you could go down real quick, real fast, real hard, you could come up real quick, real fast, real hard. And that's exactly what we did. Roblox, RBLX, ticker symbol SE, and what else it was? And it was Upstart, ticker symbol UPST, which I think I might have mentioned to you guys in my last video. They all did really well for us, and it led the charge, it led the comeback. I was very happy for that. I'm in SPY a lot, guys, whether it's SPY calls or SPY puts. So that helped chip away at the deficit and then give us a little space on a push up. So it was a great finish to what was not such a great week. And I'm happy because I feel like if on my bad week I made 600, then I'm really interested to see what happens when, you know, we have a really good week. Really interested to see. And you know what, guys, with the way I am, I feel like the really good week is next week, because I'm not going to have 2 bad weeks in a row. And last week, this week that just finished was definitely a bad week. So we're looking for a big one the week to come. Now, that being the case, guys, if you are interested in an options group chat, you definitely want to comment below and ask me about it. Like I said, it is a paid chat, $55 for the first month, 105 after that. But if you in the chat and you follow all the plays as I suggest, entries, exits, and the amount of contracts, what's going to happen is you're going to make money more times than not. Like I said, if you joined this chat 3 weeks ago and you followed everything I said, you would have made yourself what? We're talking about 27. We're talking about $3,300 you would have made over the past 3 weeks, which is obviously way more than enough to pay for a year of classes and then still do some nice things for yourself. And I shouldn't say classes, I should say a year of the options group chat. I accidentally said classes, guys, because again, spitballing it, I do have the options class on my mind. I threw out an options class today, and members of my group chat is joining it at a nice rate, and I'm making it open to the public as well. So if you're not in my group chat, you could definitely ask me about the options class. Yes, it is a paid class, but it'll be well worth your time, well worth your money, and you will never look at trading again after that day. So that's what I want you guys to think about as well. But one of the things we're going to talk about in that class a little more in depth, I'm going to give you guys on this video, is how to average down on the option and why to average down on the option and when to average down on the option. So here's the scenario, guys. You hop in a trade. We'll call it Apple. Who cares? And you hopped in an Apple 130 call, and Apple starts going south, and you paid $140 for the premium, and Apple starts going south, and now the premium is now $100. So what you could do is you could buy that same exact call, that same exact expiration, and it's going to be at a cheaper price. So if you paid $140 for it originally, and then you buy the second one for $100 after it fell, now instead of having one contract for $140, you'll have two contracts for $120, because it'll be the average of the two prices that you paid. So you pay $140 and then you pay $100, that's $240, divided by the two contracts, that's $120. Now that is how you average down. Now here's the thing, averaging down is not always the thing to do. Sometimes if you average down, the only thing you do is just make your loss bigger. The reason why is because with that same exact Apple example that I used, now instead of having $140 exposed and your potential max loss being $140, now your max loss is $240. Now the reason why that's important is because you don't want to average down on a play unless you're about 99% sure that it could come back. And if you're that sure that it could come back, fine, average down and let it do what it's going to do. But if you're anything less than 99, 98% sure that it's coming back, you don't want to really risk it, because you're just going to overexpose yourself. You're going to overexpose your portfolio, and you're going to have yourself in a position where now you're feeling like, if you lose this trade, it's going to be a demoralizing thing. You never want to put yourself in a position where if you lose a trade, it's going to be demoralizing. So to do that, I always preach about being not overexposed. That means as far as how much you're using on your buying power in total and how much you got connected to one particular position. So I don't never want to have more than, whatever I'm comfortable with. And everybody's comfortable with a different number. You have to figure that number out for yourself. But I never want to have more than a certain amount of money into one position. Because what happens is if that thing flip on you, your money's going to go bye-bye, and it's going to be nothing you can do about it. So it's definitely better to have your money spread a little bit, so that way if one thing is going down, maybe something else is going up. You guys know I always talk to you about hedging and how important that is. And to give you an example of that without getting off topic, and also to give you some free game for next week, SPCE had that's a ticker symbol for a Virgin Galactic. They had another they was going to try to shoot their my goodness, why is this escaping my tongue? You guys know what Virgin Galactic do as far as trying to go to outer space. My gosh. And with that being the case, they were looking to try to get their test landing off, and should I say their test flight, and it was successful. But this is the first time it was successful, and because of that, I hedged myself. I had calls on SPCE and I had puts on SPCE, so I knew that because of that, they were going to print. One of those is going to print. Either the calls are going to print or the puts are going to print. And as fate may have it, it looks like the calls are going to print. So we're good on that, and we were hedged on that to make sure we were safe both ways. But to get back to the original topic, what I was saying to you guys is you definitely don't want to be overexposed. You definitely do want to be hedged, and you want to have that money kind of spread a bit where you don't have all your eggs in one basket, so to speak. So again, if we go back to the original Apple example, if I had Apple and I had 25 calls on Apple, just make up a number, and Apple has a bad day, but that's a lot of money I'm losing right there. But if I got Apple and I got 5 calls on Apple and they have a bad day, well, I can stomach that a little bit better. So that's why you want to, spread it out a bit. Now with the average down, when you average down, you got to make sure that you're averaging down at a number that you're still comfortable with losing if you lose that trade. And if you can do that and you feel comfortable that the position is going to come back, definitely you want to average down. And what happens is when you average down, now you're going to get double the wins or triple the wins, depending on how much you average down. Now you'll get double or triple the wins, and the premium that you paid is going to be smaller than you originally paid. So your, hypothetical 70% win, now is a 90% win, or your 90% win is now 130% win, and so forth and so forth. And you get back $210 profit on one contract. Now you're getting back $420 profit on 2 contracts, or 30 on 3 contracts, or whatever the case may be. So that's why averaging down is a great tool on options, but it's not to be overused, and it's definitely not to be abused. Now, like I said, I cannot stress enough, don't overexpose yourself, and do not average down on a position unless you're confident it can come back. I'll give you guys a story I gave my group chat. I have a position in NVIDIA. Now, NVIDIA is part of our comeback this week. Obviously, you guys heard of the NVIDIA split, the 4-1 split that they're going to do. And when I saw that in pre-market, I knew immediately first thing I was going to do was hop in NVIDIA calls. So I did that, and when I hopped in NVIDIA calls, I grabbed a couple sets of calls. First set of calls popped up, and I was able to sell them and take profit. And again, that led to us being plus 600 whatever dollars in a group chat this past week. And the second set of NVIDIA calls, I did not take profit on. And what happened was they fell down throughout the course of the day. Now me, I wanted to average down on those NVIDIA calls because I feel like NVDA is going to have a great week with that news. And I wanted to average down. And if I did, I would have put myself in a position where I was a little more exposed than I wanted to be. And that's not even because NVIDIA, because I'm fairly confident in NVIDIA. I know they have room to run. Their chart setup looks great. They're well off of their 52-week highs. They just got news that general sentiment will move that stock. Usually the stocks you hear about that do splits, they do well after the split. TTD was the most recent one that did a split, and they're doing well after their split. First they had a pullback, or should I say after the news of the split. First they had a pullback, and then after that pullback, now they're taking off. So with NVIDIA, I can see something similar. That being the case, I wanted to average down so bad on NVIDIA because the second set of calls did fall. But I didn't, because I did not want to be overexposed, and I did want to stick to the rules that I tell you guys. I don't want to be a guy who do one thing and tell you guys to do another thing. I want to tell you guys exactly what I do. And that's why I think the people that are a fan of me, Options Boss, I think that's what they're a fan of. The fact that, I practice what I preach, so to speak, and I'm very transparent with you guys. So, that being the case, NVIDIA was falling, and I wanted to grab some more calls on NVIDIA and average down, and I did it. And NVIDIA is going to be green on Monday, and on the one hand, the human element of me is going to be like, I wish I averaged down. But on the other hand, the smart version of me is going to be like, you know what, you played it safe, you still got to win, good job. Because what's going to happen is I went in the trade with a certain amount of money, and I'm going to come out the trade with even more money. And at the end of the day, that's all you can ask for as a trader. If you get in a trade with XYZ and you come out with XYZ plus 1, then guys, you did your job as a trader that day. And that's what's going to happen on this NVIDIA trade, whether I average down or not. So I just held my ground. I did not average down on NVIDIA. But averaging down is a great tool. It's definitely helped me before. And it definitely has helped certain traders in the options group chat. I try to make sure that everyone is aware of averaging down, what it means. I tell them when I'm averaging down on the tickers that I'm averaging down on. And I think that's all important for you guys to know. So this way, when you're on your own and you're trading on your own, You know exactly what to do. You know when to do it. You know when not to do it. I'm giving you guys this completely free, you might as well say. And I hope it makes you a better trader, because that's what I'm here for. And guys, as always, I'm going to tell you, whether you're in my options group chat or whether you're not in my options group chat, you need to have a Webull Cash account. If you are trading options and you do not have the ability to day trade, you are doing yourself a major, major, major disservice. And I cannot stress that enough. It's just criminal. I don't know why they have the rules how they have it, where you can't day trade unless you have 25,000. But it is criminal to be in a trade and to be up, 2, 3, 400%, and you can't take profit because you out of day trades. That to me is criminal. I don't understand what they thought they were accomplishing with that rule, but it's a really bad rule. I'm sure some people way smarter than me came up with it for a reason that I may not understand. But to me, it's a really bad rule. So guys, I don't want you to be in that position. You definitely need Webull Cash accounts to trade options if you want to be successful at it, and if you don't want to be limited. If you don't understand why, comment below. I will explain to you why in depthly. I have different videos I can point to you to explain to you why in depthly, but I definitely want you guys to have it. And if you're interested, if you don't have it, I'll drop my link in the comments. You guys can sign up through my link. If you deposit $100, you'll get 3 free stocks, and you'll be supporting my channel grow. And for that, I definitely appreciate you guys, because it's definitely something that's going to benefit you, and it'll also benefit my channel as well. So I'm super happy about that. Guys, stay tuned. I got a video coming out in a few days where I'm going to be wearing a shirt. Guys, when you see this shirt, you are going to want to buy this shirt. And I want you guys to see it. You guys are going to see it on my channel. So definitely stay tuned for that. Guys, do some studying today. Let's get ready for a great week next week. I already feel it. I know it's going to be a great week, and I want you to feel it as well. Guys, it's your boy, the Options Boss. I'm a holler when I holler.